If you've been investing at all recently or looking into investing, just getting started maybe, you've definitely at some point heard of QQQ. QQQ is Invesco's NASDAQ 100 tracking ETF that at this point is so popular it runs futuristic looking ads across major sporting events and primetime ad slots. With QQQ being one of the most hyped ETFs, today I wanted to try and compile some of my thoughts on the ETF as a whole. Give a little bit of a discussion about its construction, what it kind of strives for, and give some commentary as to whether or not I think it deserves to be a cornerstone of a portfolio. So without further ado, let's get into the video. Most of you will likely be aware of QQQ, but for those of you who aren't necessarily aware of it, it's basically one of the highest rated large cap growth funds possible. Whether you're looking at Morningstar or looking at any other ranking site or a brokerage service, whatever the case may be, QQQ is going to be coming up if you're looking for anything that really overweights technology right now. And of course, with one of the main themes in investing for the past few years being AI, and really actually a big emphasis on tech in the past 10 years, QQQ has absolutely exploded in popularity. The fund has achieved outright staggering returns in the past 25 years. And really, if we look even in the past 10 years, a $10,000 investment 10 years ago would be worth upwards of $50,000. That's enough to make any investor envious of the potential returns they could have gotten in QQQ. I mean, it's hard to find individual stocks that have achieved that, let alone ETFs. It's almost uncomparable. Now let's talk about the holdings that make up QQQ. For anyone who invests at all in the S&P 500, QQQ carries very similar names, all the main staples you'd want to see: the Nvidias, Apples, Microsoft, Amazons, etc., etc. That being said, you can also get some allocation into some really interesting names, such as ARM Holdings, NXP Semiconductor, and ASML. Additionally, you can even pick up some allocation in Fortinet. Of course, not to be confused with the hit game Fortnite. Wait, really? Now, while QQQ definitely overweights technology on a sector basis, one thing worth noting is that on the individual positions, it actually doesn't do a terrible job weighting them relative to the S&P 500. One might assume that the position size would significantly bloom under a QQQ that's really emphasizing this, but when we look at the actual positions, Nvidia is about 8% day-to-day fluctuation wise in QQQ, whereas in VOO, Vanguard's S&P 500 ETF, it would be around 7%. And you see a lot of these where the positions, the individual ones, don't necessarily make up as big of a percent as you might think, cutting out all the other names in the S&P 500. Now, additionally, something to note here is that the top 10 positions of QQQ make up about 50% of the ETF. Whereas in the S&P 500, the top names make up about 35-ish percent given day-to-day fluctuations. So it's significantly less concentration than one might naturally assume, given that it only holds 100 names and that it's cutting out a large percentage of the S&P 500. Now, one sector that ceases to really exist in QQQ would be the financials. Now, you still pick up some exposure to fintechs such as PayPal or Mercado Libre, which is basically Latin America Amazon with some financial capabilities. This divergence, where the NASDAQ has financial stocks and the NASDAQ 100 doesn't necessarily focus on financial stocks, comes basically from a gimmick from the dot-com era, where the NASDAQ was very much overweight in financials, but a lot of people really just wanted to focus and invest on the technology stocks. And so, in order to appease the crowd and not make them leave any NASDAQ ETFs, they kind of made a NASDAQ 100 that would be without the financial stuff. Now, let's take a look at the prospectus. You can clearly see that 10 years of investing in QQQ has been just an absolutely incredible strategy for the growth of your portfolio. The fund does a rather good job tracking the desired index and at a much smaller expense ratio compared to similar high tech growth funds. So now we've given a bit of a rundown as to what QQQ is, what kind of makes up the ETF, what its kind of goals and focuses are, but I want to give a little bit of my thoughts and opinions. So one of the main problems I have with QQQ, and it's not so much a problem with QQQ or the fund makeup or anything of that sense, it's how people end up employing it into their portfolios. And what I mean by that is typically when I see QQQ in a portfolio, that individual more often than not already has exposure to a broad based index. And of course, with me being in the United States and a lot of us being more US focused, it typically is going to be the S&P 500 or total market. So it's really not like they're picking up individual new names. They're just kind of, I'd say, concentrating more into positions they already own. I mean, 87% of the names in QQQ are already in the S&P 500. And the names that aren't in the S&P 500, the very few foreign or international stock options you kind of get, they don't necessarily make up large allocations of QQQ. So it's really just doubling down on positions you already own. Additionally, QQQ, as I just mentioned, very US focused to the tune of 97% of the position being US focused. And if anyone's trying to invest in QQQ to pick up on this AI trend, you miss out on some notable international names, namely Taiwan Semiconductors, which in any ETF that you look at in AI that does a good mix of domestic and international or semiconductors or whatever it may be, that's a prominent name that you are missing. And there are multiple of those names as well. Another thing of note I kind of notice when I talk to individuals, and this might just come down to a lack of fully deep diving a prospectus and understanding what an ETF is truly offering, but a lot of them tend to view QQQ almost like VGT, where they think it's a pure growth ETF that is only focused in technology, or they're primarily investing for technology. They don't really care about any of the other stuff. And if you're fully just taking that approach, you are better off just going for a pure technology ETF that's actually outperformed QQQ, again, because they're holding different things. My final concern with QQQ is that a lot of investors don't necessarily view it as a long term position. Now, a lot of them say they do, but in order for this to be accurate, you kind of have to take the last decade or so of US stock market history and treat the history of the US stock market like it's been that. What I mean in a more clear example is that you have to pretend that the growth factor is going to maintain dominant over the value factor in perpetuity in order for QQQ to make real sense as a cornerstone in your portfolio. And again, when we look at history, not only is that kind of flipped from what the history shows, you can't really bank on an individual factor outpacing the market for really long sets and periods of time. Basically, what you kind of see is a fluctuation between different market cycles. And you see a lot of this additionally because of reversion to the mean. Essentially, based on my conversations with the typical QQQ investor, I don't necessarily envision them as someone who is here for the long run in one specific area, or if they're trying to focus on one specific area. These are typically the types of people who jump around to whatever is hot in the market right now. And that's the easiest way to not only not pick up the great returns that come from potentially hopping into the hottest next trend, it's a great way to actually underperform the market or even just underperform relative to if you had just bought and held something. So, again, a lot of my concerns aren't necessarily with QQQ. I mean, it's really hard to nitpick a individual fund that has such great ratings and for what it offers a very cheap and affordable expense ratio. It really is with the individual people and how they make this investment decision into QQQ. So let's kind of discuss these thoughts. Overall, despite the criticisms I threw out, I still absolutely love the ETF for many of the reasons I mentioned earlier. You get this wonderful exposure into high growth areas that have an emphasis on changing the world with technology, and you get that at a very affordable rate in terms of your expense ratio. Additionally, I believe QQQ can be utilized really well in a portfolio, especially if you need to pick up growth opportunities. Maybe you have a portfolio that's mostly fixed income, and if you were going to take on equity, you would much rather it be an explosive growth area, or maybe you're just young and trying to take advantage of the stock market and utilize your risk capacity and risk tolerance right now. I think it can be a great decision to utilize QQQ. It's just you need to understand whether or not you're kind of picking up new allocation or you're just doubling down on what you already have. And I think there's a lot of people who would be better off just picking. And it's kind of funny to say picking individual names because I talk a lot about how it can be hard to pick individual names. But if you're trying to pick up international exposure, you could try and find ETFs that are exclusively international and will actually branch you out from just purely US. Or additionally, you could actually look from going away, specifically just having solely a market ETF if giving up QQQ will absolutely not happen for you. I just think a lot of people don't necessarily think through that, hey, you already have these allocations and arguably a much better way long term. It may not look at that just because if you're going off of 10 years of returns and pretending that the rest of history hasn't happened, then I completely understand why people wouldn't want to get rid of QQQ. I just don't think it makes the most practical sense. Overall, it's definitely bold to come out and say that you should divest away from what's working now, and especially when you look at previous returns, and the ETF has performed insanely well. And I fully understand banking on technology right now because, admittedly, that's one of the two sectors that is really driving all of the returns in the market. It's just it's hard to sit here and pretend that understanding market history, that growth is going to outperform consistently for the rest. Value, it's in the past. And I wouldn't necessarily say, oh, in the next 100 years, I'm 100% certain value will beat growth again. I would just say it's going to fluctuate. And I feel really confident saying at different points it's going to fluctuate. I think anyone who's kind of kept up with the markets at all knows that at some point in the future, we're going to probably have an AI bubble pop. And I say probably because, of course, you don't really know that. And a bubble pop could look like many different things. It could look like just a slowing of expectations and a rationale, and people just go from viewing AI is put all of your money in this right now. It's going to explode your wealth and you're going to be driving a Lamborghini or Ferrari to much more modest expectations, more in line with what we see with other sectors in the market. But overall, it's hard to just guess and predict on things because at the end of the day, no one knows. And growth could, for all we know, just beat value, continually beat the market year after year, every year for 100 plus years. I don't know, but I really don't feel confident on that. If I had to guess, I would say we'd see significantly more cycle changes in the future because that's what we've seen. We see these patterns emerge, we see reversion to the mean. Areas that at one point were super hot, everyone crowds into them and they kind of kill all of the returns because everyone's crowding into them. And then eventually they fall off. And then when they fall off, they tend to be good bargains again at some point down the road. So, in essence, QQQ, if you're viewing it as a shorter term play, could be very good. Or again, if you don't have a lot of those names in a portfolio and you're looking for exposure to tech and you don't really feel like gambling on individual stocks, I think that's a great opportunity to utilize QQQ. But overall, those are my thoughts. I really appreciate you checking out this video. Thank you so much.